What's going on with the real estate market? This week we got both existing and new home sales for the month of August, and there was a stark difference in the reports. The headline number for new home sales showed an increase of 15.4% compared to last year, while existing home sales were up just 1.8% over that time frame. The first important consideration here is new home sales can be extremely volatile on a month-to-month basis. I got to point out they do make up a smaller portion of overall sales. With that said, pre-pandemic new home sales were normally around 10% of total sales, but with limited listings in recent years, they have been closer to 30% of all sales. Again, still smaller than the existing home sales, but a huge increase. One other reason for the large difference is how the reports are calculated. New home sales look at people that were out shopping and signing deals in August, while existing home sales looks at closings in the month, which means these deals were signed in June or July. Interest rates may have played a factor here, as rates for the 30-year fixed mortgage were around 6.7 to 6.8% in June and July versus around 6.5 to 6.6% in August. Curious to see how the rate change in September impacts the sales. This also, though, doesn't include the fact that many home builders offer lower rates to entice buyers. The supply of new homes also looks much better for buyers, considering there was a 7.4-month supply in August, and that was down from a 9-month supply in July. This compares to a 4.6-month supply for existing homes in the month of August. Home builders have a much larger need to move homes quickly, as many of them don't want them sitting on their balance sheet, as that can create risks. This compares to the average home seller that may not have a need to sell their home. And when looking at the crazy market from just a couple years ago, I believe many of them have unrealistic expectations for how much their homes are worth and how fast their property will sell. Homes are staying on the market longer at around 31 days on average, which compares to 26 days last year. These factors have led sellers to either pull their listing or even delay listing in the first place. One similarity, though, between the two reports was the annual price appreciation, with the median price on existing home sales climbing 2% to $422,600, and the price on new home sales climbing 1.9% to $413,500. These high prices and higher mortgage rates have continued to impact the first-time buyer, as their share in the existing home sale market was near historical lows at 28%. With everything considered here, I still believe the housing market will remain on a slow upward trajectory, with limited supply continuing to battle against affordability concerns. Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give a like or comment. Feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.